Sergeant Hudson here. I'm coming to talk to you about an item that is, in my opinion, something you should know to help with your family. Because a lot of things have happened recently with this kind of stuff. Um, and it's about insurance, like health insurance and what have you. There's actually two kinds of insurance you should know. You've got the stakeholders type of insurance, and then the mutual insurance. There, one main difference that I'd like to point out is the fact that is who gets to vote for the board, which this is mainly the key difference. Mutual insurance serves policyholders, not shareholders, so means that those who have the policy get the ability to vote who runs the board, and they're more concentrated on the outcome of their providing the insurance rather than making money, unlike insurances that are shareholder based. I mean, it says here policy holders have the right to vote on the company's management, and which in this fact is many don't. And yeah, most people don't know what makes sense for them. And right here, this is claiming that sometimes pressure from investors can be a good thing, forcing management to justify expenses, making changes, and maintain a competitive position in the market. And a lot of this is, a lot of these insurance companies have gone away from this. And here's my proof. I mean, it's just an AI overview on Google, but it started in the 90s, where it started becoming more and more dominated by shareholders. And I'm not pointing out political sides, but if you look right here, the major conversion and which caused the trend to intensify was after the passage of the Graham-Leach-Billy Act in 1999, which removed the barriers between insurance companies, banks, and security firms. Between 1997 and 2001, several major U.S. insurers, including that insurance, MetLife, demutualized and became publicly traded companies controlled by shareholders. Now, I'm going to pull up a brief overview of that act, which this act allowed commercial banks, investment banks, and insurance companies to be consolidated and form a financial holding companies, which makes it to where they are more concerned about being in the black, which means making money, rather than fully care of the patient. And I actually have found a list of this, and here's the long list of insurance companies that are publicly traded. Okay, and you can look up which ones are. So I will have this attached, but I came to a realization with this when I was watching The Incredibles with my son, and the whole insurer care where the boss was asking how Bob was keeping the company in the black, and he asked if Bob asked if he was supposed to be helping people. And the guy said the law required. Okay, I'm getting it wrong, but Actually, it was like Bob asked, "Are we not supposed to help people?" The boss said, "Legally, I'm required to say no, but so we are to help people." The boss goes, "Yeah, we are supposed to help people. Our people, starting with our shareholders." So when shareholders decide what these insurance companies can do, it does cause problems for the policyholders. I'm glad I work for a company that uses mutual insurance as, and I would suggest you do the same, because if your insurance is not working for you, you should work on finding a different insurance that will work for you and your family. And that way, when you're going to the hospital, you're not worried about, are they gonna deny this claim, well, deny me for this procedure, or do I have to get an authorization for that procedure, or am I even going to the right hospital? Because if they're willing to work with you and you're able to actually put some say into what they're offering you, because yes, money talks, and if people start moving away from the shareholders, they're gonna want to figure out how to get you back, and that's where you can use leverage of your money going to them. I mean, I know a lot of companies do pay for the health insurance of their employees, but at least in those companies, you can actually get people to start working together to change the health insurance companies that your company goes through. And then these other companies that are just in it for the money start having to figure out how to get people to come back, if, which would probably be providing better services, um, allowing them to just allowing the policyholder to have a little more say than a shareholder. Which actually, I think, if you really wanted something, you'd be to encourage these companies that have shareholders have the board split into two groups. One, like half the board is elected by the policyholders, and the other half is elected by the shareholders, and then they'd have to work together to make sure the customers are happy, and you can work on keeping the company in the black. But I don't know if ever that will ever happen. I will see you next time.